Good morning, everyone, from a very dank and miserable looking London town today. But that's life, isn't it? December. It's the 12th of the 12th, 24. I like these sort of these numbers. Means something to me. I'm a big fan of Douglas Adams writing and 42 being the answer to everything. So 12, 12, 24 sort of fits into that. I'll grab my towel, those of you that know the Hitchhiker's Guide to the Galaxy and other stories by the marvelous Douglas Adams. Anyway, onto the market. Where are we today? Well, obviously we let me just open our no, it's the wrong tab. Let me just open the no, don't want that. I want the calendar. We've had the ECB. Well, we've got the ECB later on today. We've got that's my calendar here. We got the SNB, Swiss National Bank, moving rates much more aggressively than the market was perhaps anticipating. I'll come back to this. Is gold on the market. We'll come back to the charts in a minute. We just look at how the Swissy has moved. Swissy's down 0.4 of 1% at the moment. Where's the Swiss franc here? Dollar up again for this fourth consecutive day here against the Swiss franc. We're at 88.60 this morning. Quite a surprise that they went so aggressively. Here's that announcement there at 8 o'clock, 7:30. What was it? 8:30? 8:30 was the hourly chart. Yeah, 8:30. And Swiss moved quite significantly, 50 basis points from the where's my calendar? Oh, it's down here. That's why I can't see it, because it's on the wrong screen. If you look at today, busy day today, the 12th, National Bank here. Unemployment rate. Earlier we had good jobs news from Australia, but let me just finish off the story of the Swiss National Bank. Much more aggressive than expected. A full 50 basis points. Schlegel, the new head of the central bank in Switzerland, talking about we don't like negative interest rates. Oh, how the worm has turned. Remember the Swiss were the first to go into negative interest rate territory and held it there for a long time, along with the Japanese. So interesting comment from the new head of the central bank there. Inflation cooling quite significantly, so it's happy. They're happy to keep going, but that was a big move. So 50 basis points were back to 0.5 of 1%. I say with the caveat that they hate negative interest rates, but we'll see. Earlier today, we had much better than expected jobs numbers from Australia. So the Aussie is up about 0.6 of 1% on the market. So remember, we'd been lagging, a big downtrend for the Australian dollar. So the Swissies are weaker this morning, the biggest mover. The Australian dollar is the biggest mover positively. So this was the data this morning at 3 o'clock. We spiked also on, we gave back as the Europeans came back to their desks here, but we're over 64. Remember, we'd been to new 2024 year lows yesterday, and we went as low as 63.36. If we just zoom this in, we did this yesterday, didn't we? But let's just do it again. We can see this new low took us from below the August low. We'd got plotted here at 63.50 zone, and we're back to these areas we saw this time last year for the there we are, as we for the Aussie down here. So the big downtrend still very much in play, although we've obviously bounced today on the better jobs numbers at the moment, and we're back over 64. We need to hold that if we're going to move high. As you can see on the daily time frame, the 20-day moving average is all the way up there at 64.62. We've ran to my first moving average at 64, which sits with the 5-period moving average, and the 9-period moving average is up there at 64.23. And the 5-day moving average is at 64, which is where we're back to and holding currently at 64.05 at the moment. But the downtrend remains very set, my friends. So watch, don't fight the downtrend, or don't fight the trend. And you see here, big old move down. We talked about this earlier in the week, didn't we? So Aussie remains under pressure. Kiwi was under pressure as well. A lot of it's to do with what's going on in China. Aussie seen as very much a proxy to what's going on in China. So more stimulus may be coming from there as well. So I think something like 65% of exports out of Australia goes to China. It's something like 18% for the Kiwi. So Kiwi in a similar downtrend against the stronger dollar, and new 2024 lows there as well. For the Kiwi, similar movement here back to November 2023. So 12-month, 52-week lows for the Kiwi also. Euro this morning ahead of the ECB, which again are expected to. Let's bring the calendar back up. Sorry. So that's the two big news items overnight, or the early trade in Europe this morning. The other thing that's come out just recently as well is the IEA monthly report. So that's lifted oil back over $70. We'll come back to oil. I know it's not many of you trade oil, but oil is a key. It's the key. Oil and gold, the key commodities, the most traded of the major commodities. So watch those key indicators of the expectations of global performance. It's got all these data on here, isn't it? So next up is the ECB. We are expecting a 50 basis point cut here with the from the 3.4 down to the 3.15 for the interest rate, and the deposit facility going by 25 basis points as well, back to 3%. So see what Miss Lagarde has to say at her press conference later on as well, half an hour after the numbers. They come out at 1:15 Central UT Universal Standard Time, or GMT. That's how I like to call it still, because it still is GMT. And then half an hour later, we have Miss Lagarde in front of the press as well with us. Well, basically, she reads the statement that's already been released, and then the press conference takes place then. And she's also scheduled, interestingly, she's also scheduled later on today for a speech as well. I didn't notice that until just now. I didn't see that on there. In between that, at the same time, 15 minutes after the ECB rate announcement, which is, I say, is expected 25 basis points. There's still chatter that it may go 50. I don't think that's going to happen, but it doesn't matter what I think. It's what the markets are telling us and what the charts are telling you, isn't it? Excuse me. My coffee's away today, so excuse me. Spectrum, I don't know if you're here, my friend. We were chatting on Discord before. You were saying you must be in the markets a long time, was your comment. And we'll see that, or was it DG? I can't. It was DG, wasn't it? Yeah. I've been around for a long time, Spectrum and DG. Doesn't make me any better or any worse than any other trader. It's just I've just got a bit longer in the tooth. That's all. Seen lots of different things. Anyway, PPI. Remember yesterday's CPI, the Consumer Price Index, is in line with expectations. That's cemented market expectations for a rate cut, a 25 basis point rate cut from the Fed tomorrow. Next week. There's chatter overnight as well. We heard that the Bank of Japan are not going to go with their hike next week, and so that's weakened the yen. We've seen a bit of a bounce in dollar yen. We'll have a look at that in a minute. So PPI, remember, significance of it is it feeds into consumer price inflation. This is what producers are, this is the prices that producers having to pay, or the inflation for producers. So again, expected to cool a tad, but again, the core number here you can see 3.2% for November. The headline 0.2 likely to come down a tad, but watch that. Watch the obviously the ones that take out the food, energy, and the transport, the more volatile indicator elements of the inflation numbers for producers. So I say watch that later on. 2.6% for the annualized number there as well. Also at 1:30 GMT, Universal Standard Time, we have UTC, I should say. We have the weekly claims. Still, as I say, I've been saying for a long time now, since the since the COVID times. 220,000 is still a strong indicator to me of a strong jobs market in the United States. We've had it's a month plus now since the Trump election victory, and markets have gone gangbuster. Crypto in particular, obviously. So jobs still remain a focus for policymakers in the US, and it's still showing you, the headlines are certainly showing you a strong number at 220,000. The caveat was the continuing claims had started to tick up. Those that have been, claiming for more than 4 weeks, but still, it's still a relatively strong number. So again, all that in the mix. The major number for as far as the Fed decision makers next week were concerned was the CPI yesterday, which was in line with expectations, ticking up highest since April, but similarly with the PPI later today. But it's still, nailed on the likelihood of a move by the Fed next week. Later on tonight, we got some Tankan is a key institute in Japan, and they do a lot of research and a lot of numbers out of them later on tonight as well, for the Japanese markets. New Asian traders that are still up at midnight my time, still trading. I'm tucked in bed by midnight normally. So key day again. Say it's a key couple of weeks. We've got lots of history on our side about certainly for the stock markets. But anyway, the majors here are. Well, I'll just go through those if nobody's asking. Let me just see if anything in the chat box. There's nobody in the chat box. Continue to show a stronger dollar really overall. As I said, the biggest movers today have been the Swissy and the Aussie moving in opposite directions because of the data that's come out, and the Japanese yen also moving on the expectations that they may not go next week. So the euro here on the daily time frame is nothing to really change. We've had 4 consecutive candles down. Interestingly, yesterday we closed below the psychological 105 level, hugely significant. Wasn't a big break again, as you can see here. I don't have to zoom that in anymore. But it was, it was a 4th consecutive day down. We're well under our 20-day moving average, sits up there at 105.65, and the moving averages here, although flat, are the shorter term ones because we've been up and down. We're up, down, up, and down again. So see where we finish today, and then obviously tomorrow brings in the final trading day of the week as well. So that's continuing to trend to the down, or remain in a downtrend. Euro on the higher time frames. Sterling, conversely, is moving higher, but running out of steam. We had a break of the 20-day moving average here late last week. It's held, but it's not looking positive. See how it's flattened out? We've moved up higher here. Took a while to break, but it's got no more. It's got no mojo, if you like, to move higher. The candles are quite small. The bodies of the candles are quite small. We're quite indecisive. We had a relatively good run here for 3 days. Final candle pushed us through the 20-day moving average, but then we're just not sure about what we want to do. A down day, an up day, a bit of an up day again. That looked quite positive there on Tuesday, but then we were down again yesterday, and we're currently down today. So it's relatively positive given that we're over the 20-day moving average, but the moving average are unaligned here. And when I say aligned, they need to be in order. If we've got a trend developing or a trend to run, we need to be in order, and we're not. We've got the 9, the 5 mixed up, although they've crossed, and it's relatively positive. Here the 5 going above the 9, the golden line here going above the green line, and then we went over the 20-day moving average here, where here, so it's relatively positive, as I say, but it's not followed through. It's been 3 or 4 days of sort of stagnation or congestion at this level. So we need to break away from this level if we're going to move higher. Remember what how the gold chart was for those 8, 9, 10 days. Looked like it was going after a big down candle. So the major down leg is over, obviously, or appears, well, certainly is over. We got major buyers, as we've said all the time. It's a hugely significant level, 125 for cable, and now we've moved up, but we're moving up quite slowly. And see, I'd like to see bigger sized bodies of candles if this is going to move up. And the next major resistance sits with the 50-day moving average, sits there at 128.45. See how it's sort of right in this previous area here as we were coming down. So it's a big fat resistance at 128. Well, I'm saying 45. So basically the round number that fits with is obviously 128.50. Big significant resistance to the upside. But congestion here, relatively positive, but we'll see as we go forward for cables. The dollar yen has this is the daily, this big leg down we had here, and we're moving up. And again, another one that's the dollar's brought back against the yen earlier in the week on Tuesday. And and you see here, it's a bigger, more significant break. Although it was volatile yesterday, given on the chatter coming from the CPI data, took us lower. Also took us higher, but we finished the day higher, which is positive. So now next leg up is the 50 fib level at 152.64, or 66 is my, that zone, 64, 66. Let's see, the fib's actually saying 64, but see, excuse me, to the upside. And obviously, markets are now looking toward the Bank of Japan and the Fed next week regard their policy outlook. So this 50 fib needs to break if this excuse me, this initial break on Tuesday, the 20-day moving average is starting to move. But you can see again there, we are aligned this time. So we've got the 5 here, the green line, the 9 is aligned, then we got a 20, then we got the blue 50. So we've got an aligned movement here now as it's turned around from this low that we pitched on the 3rd of December. Okay, so this is looking a bit better to the upside. So if we break this fib level, next key fib level of this last leg down was the first one, let me just go through that again. It's 152.65. Then we've got 153.60, which is the 61.8 fib. Then the big round number of 145, and then the next big round number is 155. So key levels to the upside. Remember, we were in this channel for a while, 155, 154. Then we got stuck in this 152, 153 channel for a while, didn't we? As we were moving up in November. So are we going to rally back up for the end of the year? We shall see. But we've got quite a lot of support zones converging there, which is always quite a positive sign. So dollar yen relatively positive over the last few days to the upside. Cable Den, we've done let's just do CAD as well if we do all the majors of the dollar crosses, the dollar measure, sorry. So that new all-time high that we couldn't quite get to, not all-time high, but recent high, 142 round number. We couldn't quite get there on Tuesday. We were down yesterday, marginally though, small bodied candlesticks. So that these big up candles are still in play, and the dollar is still bid against the weaker dollar, Canadian dollar, following the move from the Central Bank of Canada earlier this week as well. So 140.50 is where our 20-day moving average sits. You see here how nicely aligned again, the 50 down here at 139.30. Our 9 period, our 5 period, our 9 period and our 5 period moving average is all nicely aligned there as well. So we're moving to the upside. So 5-day, 9-day, 20-day, or 21 days that actually is, and the 50-day supporting this trend. And as we, nothing goes up in a straight line. So we've been up, we've been down, we've been up, and we retrace that, held up again, retrace. So are we going to come back to the 20 again? Who knows? But the 5 is still currently holding at the moment. Congesting at high is positive. Next big support has been the previous resistance at 141, and the big psychological round number of 140s all the way down there. So dollar CAD remains bid to the upside. So overall, you can see that on the higher time frame, the dollar's back sort of on the front foot as far as the majors are concerned. Crypto, let's just do this in order. Crypto, Bitcoin has had a good day yesterday. We're back over the 100,000 level on the close of the daily candle. Again, our big support sits through there at 96,300, our 20-day moving average. And again, aligned moving averages, that's what you want to see as a trend follower. That's, you're still in that. Stop loss perhaps down here, but are we going higher? Well, it's looking that way. Dip, but anything can happen with Bitcoin, can't it? The volatility can be huge. Maybe some people, obviously, clearly, people bagging, taking profit at 100,000, but obviously on an intraday basis took it higher to see where the buying would flag, and they've flagged so far. Is I may as well put that in as a little horizontal rail. It's a new all-time high here, 104, 103.98 is we say. So see what that's our next upside target again for Bitcoin, but that remains bid to the upside also. As I say, energies, the gold oil markets bounced on the IEA report, and obviously increasing demand. We're holding 70 yesterday, strong day yesterday. Obviously the situation in Syria is continuing to undermine potentially supply disruption. So prices have peaked $3 this week, quite significant move. But we're still holding $70. But as you can see, we've rammed into the 50-day moving average now, flattening out. So this whole congestion area, obviously big, hugely geopolitical asset. Oil, as we say every day, but it's had a good week so far, holding $70. Wasn't quite sure we were going to get there today, this week, but see where the next rally takes us. And we've seen previously in October and November, we've peaked we spiked through the 50-day moving average, only to come back down through it as worries continue to persist. So still a bit of a power vacuum in Syria, and you know, the parties all around there have obviously got their say. So yeah, at the moment it's been a good week. Some profit probably been taken at the $70 mark. Obviously we've had the OPEC news, we've had the monthly IEA report, and then we got the yesterday we had the inventories out of Cushing as well, the US Cushing. Sorry, I'm getting a bit. What was I going to do? Yeah, indices. So yesterday, big, all the stories. You know, the news was all about the indices, the Nasdaq, the wider Nasdaq. We haven't actually got the wider Nasdaq on it. We've got the Nasdaq 100 on it, but the wider Nasdaq went through 20,000 yesterday, closing above that level for the first time ever. So a new all-time high. Happens in December, as I say every year. I don't know who's still listening. 1.77% Nasdaq was up yesterday. The AI boom rally push continues. Google was up another 5% yesterday. It had been up 5% the day before on the announcement of a new quad chip. Tesla was up nearly 6% yesterday as well. The Dow was down yesterday, interestingly, the industrials, but the S&P 500 was up 0.82 of 1% to 6,084. Some of us were chatting earlier on Discord about intraday trading, and the two I like trading the indices on an intraday. The two I like the best is the ones DAX, simply because it's obviously it's live. And it's much more interesting than the S&P 5 and then the FTSE 100, and it's obviously in my trading day. I like trading the DAX on a short-term basis, and also the US 30. It's my other one. I tend to trade on an intraday basis too. So I don't know if anybody's here, but this setup, to be honest, let's just open it up for. This setup is as good as any, you know, I find on a short-term basis. So if we just look at the, you know, even down to something like the 2-minute time frame, bear in mind when you're scalping on a short-term basis, things can turn around very significantly. If you're trading intraday, you need to be aware of obviously the big news items and have them. You have your calendar next to you when you're taking trades, or timing of things, obviously. But again, you know, trends can occur during the day. So here, this is literally the two. What I tend to do on a daily basis, obviously measure. Let me just go back to make it a bit easier. Go up to the 15-minute time frame. And zoom in a bit. So see where my highs and lows of the previous day have been, and I mark them. So as today, the 12th, my low for today is sort of it is here. So my low for the DAX is there. My height for my high of the day so far is there. So they're the parameters, and then you say, well, what's caused that? Why did that happen then? So let's just so this is a Dow. Remember, we were down yesterday, so we were counter intuitive to the rest of the market, but you know, that's what's happened. We were down yesterday, had been down and up the previous day. So that's my range. So this is like the pre-open. Remember, the US markets open at 2:30 my time. So this is a pre-market range. So that's you know what I'd be looking at. So what are we doing today? Well, we're a bit range bound, aren't we? This is the 50 minutes. So we've been down, tried to spike up recently, but we're back down. So it's a bit of a decision point now. So we're sort of a bit of a pivot area here now. So there's nothing really going on. We've been sort of slopping about. So the 15-minute traders, you know, would have had a nice move up here, but then reversed out and got some of their profit taken away. Are they going to go back down again on this trigger candle there? Looked it for the last 45 minutes, but now we've bounced back up, and you can see there's a bit of a there's a pivot. See how we're like sloping through this area? Just again, we're just looking at today, so we still remain sort of biased to the downside. But this is a key pivot area, so there's not a great deal going on. So bear that in mind. So the 15-minute had been positive, now it's turned negative. So if we look at the 2-minute chart, the 2-minute chart, which is obviously a seventh. I'll explain again the cycles of this. So 2 times 7 is 14. So it's quite nice, cyclical. So there's our uptrend on the 15-minute. There's our current downtrend, and the 2-minute tried to go up, but it's reversed really aggressively. So it's a mess. It's a mess. So we've had a move down, which is played out, but it's reversed quite quickly. So there's nothing going on at the moment. So stay out. I'd say stay out till create some sort of alignment, and that's what you're trying to identify a trend. If there isn't a trend, you know, you want to be using mean reverting type indicators. So here we had a trend up, and then it reversed, but it was still relatively positive. Got out, got back at long there, got taken out there, got long there. Just followed your stop loss up. You might have got taken out on that one. Certainly, we got taken out on that one as it closed under that moving average. That would have taken you short. Didn't work out. You'd have gone short again there. That did work out. And then you've got stopped out somewhere on this candle somewhere as it's leapt up. That would have taken you short, but then you've been stopped out on this one as well. So it's a bit bit messy. So as you can see here, this is literally 2 minutes. So since 10:30, last 45, we've sort of been under the 20 period, haven't we? Still, and we certainly can't get back over that 50. So the bias is to the downside. So that would be a short position. That would have stopped out. That my little would have gone short here. Would have been filled at this point. You see that obviously the spread is quite emphasized here because it's pre-market and it's 2-minute time frame. So that would have just triggered a short position just now, really roundabout, and it would have got filled roundabout there. This if we'd automated this strategy. To the downside, that's the DAX, so that would have gone short. Sorry, not the DAX, this is the S&P, the Dow. So let's see how that pans out. The DAX, what's the DAX doing? Similar, you know, do the same thing, except remember now the DAX is live, the cash market is live, so this is much more indicative of what's going on. So what's the higher time frame doing? Well, we're in a massive uptrend, aren't we? we're consolidating at highs. We've got this new, we burst through 20,000 last week, and we've held it. DAX is consolidating. There we are. And there's our, you can see on the daily time frame, there's our range. 20,300 is a key support area. So if we get down to that again today, like we did yesterday, whoops, where's that? That could be you know, key buying opportunity potentially today. So the daily's up. So we scroll down. So the 4 hour is very much still up, but we're consolidating more, aren't we? We've tested the 20. We've tested the 20 here. The 1 hour, as our big support area, we went through it. Is that today? No, yeah, that was earlier this week, and then through it yesterday, but rallied from it. And now we're sort of, right as we speak now, we're literally halfway between our all-time high up here at 20,000, nearly 500 level, and our support area here at 20,300. So again, there's little direction here. It's sort of biased to the upside because we've sort of held the 20 period moving average and the 50 period moving all this time. But again, it's run out of steam. And then interestingly, today, we've run out of steam lower than the high of the 9th earlier in the week. So although it was higher than the 10th and yesterday, is that yesterday? It's the 12th today, isn't it? Yeah, so interestingly, we're sort of pushing yesterday's highs, but coming back down at the moment on the 1 hour time frame. So the shorter term frames will be a bit be to the downside. If you look at it, so that's a 15-minute would have rolled over. There's a 15-minute rolling over in the last hour or so into this key level. But again, 15-minute traders today, you can see, you know, our low of the day is here now. It's above that key 20,300 level at 20,380. So that's our low for the day. If we're going to do this on it like we did with the, so just put that in. That's our low for the day. If I change the color of that one. Oh, that's our low for the day, and that's our high for the day, isn't it? And this is live market now, and this spike here is, you can see they see that's the 8 o'clock candle, and that's as the market's open, as the live market's open. So we get a lot of volatility before that. If you want to trade this before the market opens, you know, sometimes I do that, and you say, well, what's the range before the market's open? Well, we went to new highs, didn't we, as the market opened, but it cooled very quickly, or within an hour it's gone back down. So we're now towards the lower end of our range for the day. So this is you can see here the 15-minute candle has moved below this little level it had for a couple of hours, and now that's the, you know, 15-minute trader would have taken a short on that, looking to test certainly that candle there, that candle low there for 20,400, and then again another big round number. It's only 7 pips away, or 7 points away, but still plays. And then there's a little bit of a gap there on the 15 minutes. Yeah, the bodies of the candles are. There's a gap, so there's some weakness there. If the 20,400 level breaks, lots of people have their profit target at 20,400. Certainly those that are short from up here. So that's the 15-minute. Now if we go down to the 2-minute, that will be even more volatile as it is. And again, you see if we zoom in again, you can see the bias to the downside. So the lows are getting lower here. Sorry, the highs are getting lower here. Since this spike on open, so they can see that's the 8 o'clock 2-minute candle. So that's our high for the day, and our lows are starting to get lower, aren't they? So we're biased to the downside here. We didn't quite get to that 20,400 at the moment. It's turned around, but it's still short this from that break there. If and the moving average is still aligned. We've moved back to test the 5 period, but the 9 period is still holding as well. So when I tend to use this on a short-term basis, I tend to go short when everything's aligned as it is, and close out, leave it open, and close out if the candle closes above the middle moving average, which is the 9 period. Okay, I'll do a separate webinar for it. So on this, but anyway, that's those short-term trading moves that I think as Weeby was asking about on the Discord channel. I can't remember who it was now. Was it Spectrum? Was it Weeby? DG. I can't remember. Anyway, my friends, that's the indices. So as I say, the S&P 500. Let's go back to the daily on this one. Not all-time highs. Whoops. But a strong move yesterday, strong up candle again. It remains bid. It's December. It's a positive time for stock markets. And if you've never traded in December before, it can be very, very positive for stock markets. And the famous Santa rally, the January effect, all potentially coming into play following that CPI rate reading and expectations that the Fed will cut next week now at about 90 odd percent. I think 96% still this morning. Right, I'm getting lots of messages. I need to go and do some other work, my friends. So Ellipse, there's a particular asset anybody wants to have a look about or talk about. I'll leave you with everyone's favorite, which is gold, which has come down $3 since I started talking. It's obviously not related to me, but a big move this week. We talked about it yesterday, didn't we? We were long. I was closed out yesterday. Actually, I didn't take it, but my colleague Weebird, he was talking about this 2720 area. We got to there yesterday. We've been higher again this morning. 2726, our intraday high so far today. So gold remains bid here on the daily. You can see the 20-day moving average now all the way down to that 50 fib level of the big down candle we had on the 24th. 25th at 2664. So gold remains bid to the upside. And again, you see how the candles are aligned here. Having said that, because of this move down here and then this leg up, which was not bought completely, and then we had a move down, you can see how the 50-day moving average is flattened. So that's a little bit of a caveat that we're not aligned in the higher time frames. So, but the shorter term trading time frames, the 20, the 9, and the 5 are all nicely aligned. They're fanning out. They've got a nice little angle there, so we could see some more upside potential. But we'd need to break. Next, as you say, we've hit that as a target level. An extension is a target level. This 2792 level. It's not a resistance area. You can see it's above these all-time highs we had. So there is potential for a new all-time high for gold before the end of the year, but we could also retrace back into this between the 2700 and the 2600 level as well, as quickly if things resolve, if there's some resolution to the political situations around the world, but that doesn't look likely. The Chinese are still back in the market. That's helped it this week as well, buying again. So there we go. I've rattled on for nearly an hour this morning. I didn't mean to do that, but it's 20 past 11. So, anyway, gold remains bid to the upside. But let's have a look at gold like we were doing with the other markets. So the daily is still bid. The 4 hour, when I say bid, it means it's the trend is to the upside. So be careful trying to short this with any significance. See why I use that midpoint, the middle moving average to keep me in. See here on if you're a 4 hour trader, this has been long since the 8th of December, and you just trailed your stop loss up as it's got up, or you've used the this moving average as a potential stop loss area. I mean, if you'd had it right on the moving average here, it would have stopped you out on that volatile day we had on the 11th here at 3 o'clock. But remember, it's all the news. So this issue with the short term trades, but none of the candles you can see here have closed below this mid trend line. So you're still long. It's getting a bit dicky, isn't it? It's got a bit sticky the last couple of days as we seem to have rolled over. We got to our target of 20, that next fib level, and then we went higher again this morning. So, but then again, that's a positive candle, this one, because it's closed higher. Marginally, it's closed higher than that. So we're still trying to push. There's still buys around. So the 4 hour trader is still long gold. The 1 hour trader is probably turned around this morning. Not quite. There we are. It failed. That was a short. That would have been a short trade. It's immediately bought back, so it has stopped you out. Well, I'm saying it stopped you out. If you'd had, again, depending how you were trading it, if you saw this big down can, you might have put your stop loss up here. And you're still in it, still short. But if you're looking on the cross of the moving average, which is what's happened there. You would have come out there. So again, it depends how you apply this strategy, my friends. But yeah, that's looking to go lower again, isn't it? But 2307's in there. That was our low. Was that our low? I can't be in the low of the day, can it? Not sure why that 2307's in there at the moment, to be honest. But yes, it'll be there for a reason. But yeah, and the 2700, the 50-hour moving average is coming up to support that as well. So again, you can see it's a bit weaker than the 4-hour and the daily, the hourly chart. But you know, the break of the 20-hour there only happened for one. It was bought back, broke there, bought back. It's breaking now. Is it going to get bought back, and we're going to see this sort of move again? Yeah, patience will tell. So that remains positive. It's looking like it may have rolled over. The shorter term, if you look at, like, you know, if you try and trade this on a 2-minute or 5-minute chart, that will be, you know, it would have been short. This is 2 minutes on gold, and it's been lumping down most of the European session, hasn't it? The lows, the highs are getting lower, the lows are getting lower, and we've plopped in. Looked like we were potentially going to the 2700 level. But you can see on these short time frames, it's much further away. So leg up, leg down. That looked like it was going to go up. Hasn't happened. Been shorted again. So the bias on the short term is to short the gold market. So it all depends about how long you're holding your trade for, what's your outlook like, and how you apply the strategy. Because these strategies all work, and they work well enough. When I say they work well enough, I mean they have at least a 60% hit rate, and that's the key thing. Some of them better than others. You don't need an 80%, 90% hit rate. It's about hanging on to your profits. So many people give their profits back, and that is, guys, that's one of the beauties of trading with the prop trade. You know, you have the rules. You've got to follow the rules if you're going to be successful. Most people that fail, whatever type of trading, whether trading futures or CFDs or whatever, fail because they haven't got a plan and they can't stick to the plan and they risk too much. The beauty of prop trades, or the proptrade.com, is that we make the rules. We have the rules. You buy your challenge, but you've got to have, the rules. I was going to go to the main website, wasn't I? Not that one. Don't want to see what Jim Carrey's doing. Where's it gone? I've lost it for some reason. Let's just open a new tab there. So as I say, the challenges are there for you. The rules are there for you to follow. So whether you're going sort of at one step with the Express Challenge, or you're a professional trader, or you've got an experienced trader, and you're looking to start with profit share that starts at 90%. That's absolutely incredible. There's not many prop trades around that will allow that start their profit share at 60%. I've seen some at 40%, 60%. We start ours at 90% for the Pro Challenge. Standard and Express go up, start at 18, go up to 90%. But pros here with us look at a profit share from 90%. So get to the website, pick what you want. There's a big discount on at the moment. We've got a 25% discount for the Christmas period. It expires on the 2nd of January. And as I say, it is a very, it's a trending market. Certainly if you're trading stocks over this period, don't, just because it's Christmas, people switch off and, treat yourself, have a go, and follow the rules. That's the key thing. These are the rules, and they're here for a reason. Daily loss 5%, maximum loss 10%. They're good restrictions. Leverage 1 to 50, 1 to 100 on some assets, but 1 to 50 is still a very good. Many would argue it's still quite a risky leverage, but it allows you to leverage these smaller amounts, and if you can make 10% and 5% in the second time, you get to be a funded trader with these accounts for a small investment of just over $70 for a $10,000 account as a experienced trader. So whatever level you are, whether you're a pro or you're a beginner, give it a go. I said there's 25% off at the moment, and we're all here to help. And just ask, as the guys have been doing up on Discord. So I'm going to wrap this up because I've been on for too long and I've got lots of other things to do today. So take care, everyone. And where am I? I'm here. And we'll see you all again tomorrow. Take care. Watch that. What the Central Bank of Europe have got to say, and those jobs and PPI data from the US later on as well. Take care, everyone. Bye bye.